Hey everybody, we're recording this video to talk about an exciting new product slash feature that we're launching at RE Cost Seg, which is the ability to create drafts of 3115 forms for our clients. And it's a new product available at RE Cost Seg that you can add on to a cost segregation study in scenarios where this would be applicable. I'm joined by Matt Gigantelli, who is the head of product development at RE Cost Seg. He's incredibly knowledgeable about all things cost seg and more. So we're really excited to have him sharing some of this information and doing a deep dive on 3115s for you. Matt has a presentation about 3115s that we're going to use to guide this conversation a little bit. And let's just jump right in. So Matt, starting from the absolute 101 level understanding of 3115, what is a Form 3115 and who needs a Form 3115?
Yeah, absolutely. I just want to say, first off, I'm just really happy to be able to offer this to all of our customers. It is a required form for a lot of real estate investors. So it's really helpful that we are offering this as an add-on service to our cost segregation studies. So I'm going to share this presentation and we'll just kind of get into it right away. All right, so first of all, Form 3115, there is more to it than just correcting depreciation, but in the framing of a cost segregation study, that is what we're concerned with. So 3115 is used to correct previous year's depreciation methods and allow you to change to the more accelerated methods of depreciation that are unlocked by a cost segregation study. So on this slide here, you can see, it can be used for inventory accounting, method changes. It can be used to change the overall method of accounting, but we're concerned with changing the depreciation methods. And the good part about Form 3115 is it allows you to kind of look back at the depreciation that you could have been taking and get that corrected without amending previous year's tax returns. And so what we do is we fill out, and the next slide I have.
Just to kind of summarize that, Matt, is it safe to say that, the vast majority of the time that we see a client needing a 3115, it's because they own an investment property. They've had that investment property placed in service, meaning it's been rented for at least one tax year already. And then the client learns about cost seg or decides that they need a cost seg based on their tax picture. And as a result of already having done one or more years of straight line depreciation, deciding to do a cost seg now, that's when the Form 3115 comes in.
Yeah, that's exactly right. So anybody who's placed a property in service in a previous tax year and is using a method of depreciation that they would like to change, they're no longer going to be using. So even in some cases, people haven't been taking any depreciation, which is, obviously totally incorrect. But most of the time it's you were taking straight line depreciation. You already filed your taxes from that year. And now, the next year you either found out about cost seg or you finally got around to implementing a cost segregation study. And so you need to correct that depreciation. And then also there's some other things that you can correct with this form. So a lot of times we'll see, maybe the land allocation wasn't really based on anything factual. So one thing that we do at RE Cost Seg is we always try to make sure that our land allocations are backed up by, county records or something that the IRS is going to be okay with and approve of, a method that they approve of. So if you had incorrect land allocation, we correct the basis of the land allocation. If you missed capital improvements, sometimes people don't realize that, they were supposed to treat the capital improvements the same way with depreciation. So we can go ahead and add those capital improvements to those previous year schedules as well. So the 3115 is it's really helpful. And it just gets everything corrected and on the right track moving forward for your depreciation schedules.
That makes sense. So I think you had a slide there showing a little bit of what the form looks like, but talk about, the actual steps of producing one of these forms. What does a client need to provide to RE cost seg, and what do we then do with it?
Yeah, so being that the nature is you already placed a property in service, you would have already filed and you'll have a depreciation schedule. So we're going to need that depreciation schedule so we can see what the basis was when you placed it in service and what the previous depreciation that you've already taken was. And then what we do is here we have the adjustment right here. It might be better just to go through this as an example.
Sure.
So on the last day of 2022, this client took $24,610 of depreciation already. What we did is we said, well, actually, on the last day of 2022, you were supposed to have taken, $229,000 worth of depreciation. And that's the power of bonus depreciation. You can see it illustrated right there. This property had 100% bonus depreciation because it was purchased and placed in service in 2022. So all of that personal property, that's what we call 5-year GDS, general depreciation system. All of the 15-year property, and then of course the remaining straight line of the building and structural elements. That was their depreciation that they should have been taking for 2022. And then in 2023, my next slide here, they would just on that form 4562, go find these categories 5, 7, 15, and 39 year, and they would fill it out as so for 2023. So form 3115 gets you caught up, and then you just kind of use the correct method moving forward.
Got it. And we're generally talk a little bit about what we're providing with this form, because we can't explicitly provide tax advice. We're not CPAs. We encourage everyone to work with a tax professional. Is it accurate to say that we're drafting this form, but then it needs to be, handed to someone that's actually going to be filing the taxes with the IRS?
Yeah, absolutely. The form has to be signed by you and your tax preparer. So what we're able to do is we're able to have you fill out a questionnaire, and we can get kind of all the basic questions that are required to fill out what's called an automatic change request. So there's certain sections of the form, sections 1, 2, and 4 that are about an automatic change request. So we're going to ask you questions just to kind of tick those boxes. They're all just really standard, kind of simple questions. And then what we're going to do is that 481A calculation that we just showed. I think if I go back. Oh, well darn. Do you know how to go back? And there we go. So here's that 481A calculation. So we also attach a statement. It's called an attachment, has all the statements in the 481A calculation. So we prepare all of that, and then we pass it off to you and your CPA. And then we're, of course, here to answer questions that your CPA might have as far as getting this implemented. But your CPA does the final review, signs it, you sign it, and then they deliver it to the IRS. Accordingly, they have to send one version by mail, and then they send another version to like their national office.
Got it. And are there what else do we have in this deck? Are there other slides that we should look at, or things that we haven't covered yet?
Yeah, well, you got the little preview there a second ago when I clumsily fumbled through it. I put in just some questions that sometimes we have to come back and get more clarity from customers on. So in the questionnaire that we have you fill out, that's what you see in the top image there. There's a question if you previously lived in the property. We have a lot of customers who live on the property while they're doing work, and then they transform it into an STR. So we just need to know, what's the start date, what's the end date of when you lived there, so that we can make a very clear statement in the attachment to this form that you're going to deliver to the IRS, so they see, very clearly what the situation was and that you corrected it in the right way. So we do have that, just when you're filling out our form, just try to give us the most accurate information that you can. Prevents more back and forth, gets the form to your CPA faster, and of course, everybody's happy. Another question that we get often is, what does an automatic change request mean? What makes this an automatic change request? You see that online. It just means it's a pre-approved request from the IRS. So you don't have to wait for them to say, yeah, that's okay, you can do this. It's assumed that it's okay. And then if they have any questions about it, you should always check yes on our box. Do you request a conference with the IRS? This is just saying, if they have an adverse response, they're going to contact you and give you the chance to explain what it is that you did here, and then they won't just say no, you're not allowed to do this then. So obviously, if they reach out to you, you can reach out to us, and we'll kind of just send you an email with all of the explanations that you need in order to clarify whatever questions that they have.
But just to be clear, in our experience, this isn't this concept of changing your depreciation schedule after you've placed a property in service so that you can do a cost seg and then having to file a Form 3115 as a result. This is not an uncommon thing that is,
Yeah, it's not uncommon at all. I mean, I would say, 30-40% of our customer base has to complete this form in the first place. You go online, you'll see look back study, catch up depreciation, all these terms around it. It's super common enough, obviously, to have, slang in the industry, right? So
sure.
Yeah, it's a common thing. And, it's just a required form that you have to fill out. It's no different than filling out form 4562 to claim your depreciation for the current year. So it's just a streamlined service. Instead of going back and amending tax returns, the IRS said, hey, here, this is easier. Do this.
Right. That's another important thing to note. When you're doing a Form 3115, what you're not doing is going back to previous tax years and, like amending them. You're just saying, I'm going to take this year. Here's the form going, this year and going forward, I'm now using this depreciation schedule.
Yeah, that's right. And it all comes back to this sort of 481A adjustment. You're saying, hey, up until 2022, I took this much depreciation. I was supposed to take, in this case, way more. Here's the net difference to get me caught up. And then 2023, I'm going to take $19,602. And moving forward, just, you're on the correct schedule now moving forward. And this excerpt we see right here, this is actually one of the deliverables that we provide with our final deliverables. It's called the depreciation by asset. So it's a schedule of every single asset that we identify on your property, the depreciation of that asset for every single year of its recovery period. So it helps, like in many cases, if you have a partial asset disposition, you need to retire an asset, you can take it out and you can see how that affects your depreciation schedule over time. So it's a really cool tool, and it's really helpful when you want to go file your taxes, let's say 2023 and beyond, on Form 4562. You just literally input these numbers for that property. So,
yep. Great. Anything else on 3115 that we haven't covered that we should?
Really, I think we can just talk about the process and make sure we have that clear. The process is pretty much, if when you submit a request for a proposal to us, we're going to see when you place that property in service, and we're going to see what tax year you're planning on filing for. And if you place the property in service in a year before that tax year, we're going to add this 3115 offer onto your proposal. It's a form that you need. We hope that you take that proposal to your tax professional and go over it together, and they're going to say, oh, great, they're doing 3115 prep. I don't want to do it. I mean, really.
Yes, a lot of our CPA partners are very happy that we're adding support for 3115 prep.
Yeah, they're thrilled.
It means they don't have to do it.
Yeah. A lot of people they hate this form, so we love it. It's a necessary form. If you're doing cost seg, it's kind of like you need to be able to do this. So so you're going to fill out a questionnaire. It's a short questionnaire. Like I said, it's just to kind of check those boxes on the form. And one of the boxes is saying, like, did the taxpayer tell you this information and verify it's correct? So it's like, yes, you did. And then we're just going to complete the form and deliver it to you with your study, and you're going to give it to your CPA. And if they have a question, they can reach out to us. We're glad to answer.
Great. Well, thank you so much for putting this together, Matt. It's a really exciting thing to be launching at RE Cost Seg. We're excited to share it with you, and for anyone that needs a Form 3115, hopefully deliver you one alongside your Cost Seg study soon. As always, you can reach out to us by going to our website, recostseg.com, or follow us on Twitter at recostseg. We also have a general email for sales, which is sales@recostseg.com. So we'd love to hear from you. Don't hesitate to get in touch, and hopefully you found this to be informative. Thanks so much.